Welcome, welcome back to this channel. This is Unfiltered Forex with me, Clement, and in this video, we'll be comparing these two companies, Take-Two Interactive and NetEase. I'm sure by now you've already watched the two previous videos I did on these two companies, each video about what these two companies are and what they do. And now you've come to the part where we compare the two businesses as overall gaming companies to see why is one of them not doing so well despite being the bigger name in the gaming industry. All right, so here we are. So first you can see the stock comparison, the intrinsic value. NetEase is trading only just barely above its intrinsic value, and you can see the price history here. All along it has been like keeping up with its value, and this value is not absolute, like it's not the perfect intrinsic value, it's just the value according to how these guys calculate it, so it's around there. Then if you use another metric, most of the widely common ones, this is around the number you'll arrive at. But looking at Take-Two Interactive, it's currently overvalued by almost 40%. And you can see from the price history, at some point in the past, it was still trading pretty high above its intrinsic value, and then kind of returned back to it. And for most of the times, it's above, and currently it's above by really far. Of course, this is due to the expected revenue from the GTA 6 release coming out next year. You can see how far ahead that is, and there's a lot of hype being priced into the stock. But for NetEase, you can see it's usually a very stable company. They don't have those really big titles, and that's what we'll be looking at shortly. Even before I move on, I would like to compare the actual products of these two companies, the main ones, right? Let's go to it. So this is Steam. Steam, as you know, this is if you play games on your computer, desktop, you know, Steam. This is like literally the number one marketplace for games. All the games you'll find, PC and I think even console, they are available on Steam. So this page is showing publisher NetEase games. They don't have a official page on Steam, but yeah, all the games they release, the publisher is tagged, and these are the games NetEase has released on Steam. These are the PC games. Remember, NetEase is also into mobile gaming, but yeah, let's look at the PC games for now. You can see all of these are free. NetEase does not sell games. Maybe they sell content, but not the game itself. So, like this Marvel Rivals, there are in-app purchases. So once you download the game and start playing, within the game, there are some purchases you you might decide to make. Players might decide to or not to, but usually they do. So you can see NetEase, all of their games are free, right? But the other publisher, Rockstar Games, remember Rockstar Games? This is a subsidiary of Take-Two Interactive, and this is the one that hosts the popular brand GTA and Red Dead Redemption. Those are the two biggest brands under this subsidiary of Take-Two Interactive. So as you can see, top sellers, all the games are paid to download, right? You have to pay to download the game and play it. This is Grand Theft Auto 5 Enhanced, $29, Red Dead Redemption 2, $14, Red Dead Redemption, $49. All of these are paid games, right? And then, of course, there's a 2K. Remember, this company, Take-Two Interactive, they have three major brands. That is Rockstar Games, 2K, and Zynga. Zynga is for mobile. We won't be looking at that part for now. And it's actually a newly acquired company. So it won't help us much at the moment. All right. So checking or 2K. You can also see top sellers. 2K, I'm sure you know, there's NBA 2K, WWE 2K, so golfing, tennis. You can see PGA Tour. This is a golfing game, and you can see all the games also under this brand. They are also paid, but this one's a bit more expensive compared to what we've seen on the Rockstar side. So by now, I'm sure you have the gist of what is happening here. NetEase, we have this one publisher. NetEase, all of their games are free, but Rockstar, all of their games are paid and they are quite pricey. All right, so the next thing you have to compare is the player count. Like Marvel Rivals, Blood Strike, you'll have to compare the player count of their two top games with the player count of these other games, top games of these other company. Like now we'll be comparing Red Dead Redemption 2 and GTA 5, and also I think the 2K series. Let's see. Blood Strike. This is Blood Strike. This is a game published by NetEase. So we'll be looking at the player count. You can see this is a very small game. It only has had a peak player count of 6,000 players. You can see this is max history of the game since it was released in Q4 last year, right? You can see the player count is steadily rising, but it's not that popular of a game, right? Another one, Lost Light. This is another game published by NetEase. If we go back to the page here, you can see it's the fourth one on the list. This actually came out in 2022, so it's an older game, and being that it's been around for a while, the player count is kind of supposed to be solid on this one. Lost Light, you can see the max player count, or this is the max timeline since the release of the game, and the peak player count has been 7,000 players. This is on Steam 15 months ago. So you can see even this game is not big. So far, Blood Strike and uh, Lost Light, these are some of the popular games NetEase has published in the past, and they're not that big. There's now also the recently released game Marvel Rivals, which I talked about in the video while I was discussing NetEase, and you can see the peak player count is pretty high, 644,000 players, and it peaks around 4 months ago. You can see it's on January actually this year, right? So this was when the game came out, and there had been some hype around it, and now the number is kind of stabilizing, if I may put it that way. Most of the hype is kind of dying down, and uh, these numbers will stabilize probably at below 100k players, and you can see 65,000 players right now. Right. So moving on. Now we're looking at the Rockstar Games. Right. This is Grand Theft Auto 5 Legacy. This is the GTA 5, which was a record-breaking game during its time when it was released. Like you can see, all-time peak 10.1 years ago. This was when the game was released, and it had 364,000 players on its first day. This is the day it was launched, April 13th, 2015, right? So you can see how the hype was really big at the time. And I remember the company Take-Two Interactive, they did recoup all of the capital they spent developing the game on the first day, right? So you can see since then, the number has been steadily increasing, but mostly stabilizing, and now it's kind of dropping with the scheduled release of GTA 6 next year. So you can see 364,000 players 10 years ago. This was a huge deal, right? Really big. And then moving on, now there's the Red Dead Redemption all time peak 99,000 players. This was around 3 months ago. So you can also see this game is also huge in this scene, right? And then again, NBA 2K. Now this is in the 2K series. Also, a really big name. As you can see, these are only three we've looked at for Take-Two Interactive. This is 2K 2025, 56,000, Red Dead Redemption 2, 99,000, GTA 5, 364,000. So these are the top games, or rather top titles by Take-Two Interactive under the year. Companies Rockstar Games and 2K. While NetEase, they aren't that popular, but yeah, they aren't that popular, but you can see how low their numbers are. This on Steam, they are quite low, but they seem to know what they're doing, and even in the mobile gaming scene, they're really big. Next thing you want to do at this point is, yeah, let me first come back here to check the fundamental analysis. You can see the stock. NetEase is a profitable company with their low numbers, while Take-Two Interactive is a loss-making company with their significant player count and brand, how big the brand is. And then there's something I wanted to compare, the financial. Let me see. Yeah, the financial. This is where we are now. This is annually, and you can see for NetEase, they have other businesses that they do, right? But that contribute to such a big revenue, and most of it is actually from gaming. Like you saw in the video I did about NetEase, their biggest business is in gaming, right? And you can see all the games are free, but somehow they have this triple digit revenue in billions, while Take Two Interactive only has $5 billion in revenue, while NetEase has 105 billion full year. Full year. These are annual results. And once you come to the operating income, you can see NetEase is doing very well for themselves, while Take Two Interactive, they actually are operating at a loss, right? So they lose all their revenue and more. And once it comes to the net income, you can see same case. NetEase has very strong income from their big revenue, but Take-Two Interactive are actually at a loss from all that, how big the name is, right? And then EPS, you can see pretty bad. EPS on this side is actually positive. Operating cash flows. It's a stark contrast between these two companies compared to how big the brands are. I'm sure even some of you probably didn't know about NetEase until I did the video. And now coming to the balance sheet, you can see how this is what I was telling you. One company here is actually having a very strong balance sheet, and the other one is very weak. Not weak in terms of numbers of assets and liabilities. Like you can see, $196 billion in assets, only $12 billion in assets for Take-Two Interactive. But this is not the number we are focusing on. What we are focusing on is the quality of the assets. Like you can see here, I don't know if it's visible, cash and short-term investments, 70%. So NetEase, 70% of their balance sheet is cash, right? Meaning these guys have actual money to back their operations. But when you go to the Take-Two Interactive side, 70% of their balance sheet is intangibles, right? Intangibles. You know what intangibles are? Now, this is the brand name. Talk about patents, intellectual property, all that stuff, right? It falls under intangibles. And you can see it's not something you can use to like take the company forward, because intangibles don't exactly materialize to hard cash when you need them, right? These are intangibles; they're not very useful to you. So, and even the how they are valued is quite a bit shady, because their value can easily be inflated. Like you can see here, you can be sure the value of these intangibles has been inflated to kind of keep the balance sheet not too bad. Only 9% of their balance sheet is in cash, and This is what tells you that this business is not doing very well for themselves. There's even no need to check the liabilities. Once you see the assets and you see this company has 70% of their assets is cash, but this other one, 70% of their assets are intangibles, you already know which company is doing better, regardless of the number. You already know which company is doing better. All right, moving on. Or even before I continue, like now we have gotten to the margins, there's something we have to check about the income statement, right? This is the income statement where we have the revenues and the operating income, right? For this one, I will go to Seeking Alpha to check, to compare rather. Here we are. So we are on Seeking Alpha. This is another very useful website for stock analysis. And in a few, you'll see why I have switched from Alpha Spread to Seeking Alpha. So this is a company NetEase, and we're looking at their financials. And we're starting with the income statement. Actually, this is the only one we look at, and even we won't look at the whole of it. Period annual view as, let's view as absolute values for now. Yeah, absolute values for both companies. Period annual view absolute, and the currency is United States dollar for both. So NetEase is doing $14 billion in revenue for the full year, and coming to cost of revenues, you can see $5 billion. And when this is the part you want to look at, right? Selling, general, and admin expenses, like the operating expenses segment, because this is where the profit now turns into a loss, right? After you deduct cost of revenues from the gross profit left, coming to the operating expenses, the remainder here is what determines if you're going to have a net profit or a net loss. So for NetEase, you can see $2 billion in admin expenses, $2 billion on research and development, and then totals. And then you subtract this from the gross profit, you get the operating income. Coming to Take-Two Interactive, you can see revenues $5 billion, cost of revenues $2 billion, almost half, and you're left with that a gross profit of $3 billion. But once you come to the admin expenses, the operating expenses, see already $2 billion gone from the gross profit. It's gone. Another $1 billion gone to R&D expenses, and other, now the operating expenses in total come to $3.7 billion. And once you subtract this from that, you're left with a net loss, right? So this is where now, as you can see, revenue now turns into a net loss for the company. It's how it's managed. And now this is the part where you'll have to change this view. You change to as a percentage of revenue for both companies to see how much of their revenue are they actually spending on, let's just say, the wrong things. So this is NetEase. You can see revenues 100%. And once you come to the admin and expenses, rather the operating expenses, specifically this one, this is now the cost of running the business. We're talking about marketing, employee benefits, salaries, yeah, just costs of running the business. And you can see it's only 17% of the revenue, right? And this 17% is what keeps it low enough for these guys to actually have a profit after all these costs have been deducted, right? If we come to Take-Two Interactive, 44% of their revenues is going away to expenses like we said, marketing and employee benefits, salaries, yeah, that kind of stuff. 44% of their revenues is disappearing here. And once you do the totals, it comes to a negative. So you can see the difference between these two companies. One company is spending 17% of their revenues on expenses. The other one is spending 44% of their revenue. And even coming to research and development, you can Take-Two Interactive said that they are developing GTA 6, so it's taking up some of their money. Like you can see in the past, this is which year? Yeah, 2022, 2021. This was before they started making GTA 6, and you can see the R&D costs were quite low at the time. But currently, where we are now is that both R&D expenses and operating expenses, the administration is costing the company lots of money compared to a while back. And it's not just this one part or this one rough patch they're having, because if you compare, I think I'll do that in a separate video, but if you look at the long term analysis of how these guys have been growing, let's check operating income, net income. There's something I'm looking for. We should look at the margins. That's where we want to be at. Yeah, we've gotten to the margins, gross margin, operating margin, net margin. This is the one we want. I don't know why the chart isn't appearing. Yes, this is what I want to see now. As you can see, since a while back, we're looking at NetEase 2015. Since around 2014, this company has always had very strong margins, like the net profit 40%, 37%, and this is 2015 we're talking. But coming to Take-Two Interactive, 2014, this is actually when the company released GTA 5. No, yeah, GTA 5 around 2014 there. You can see even at that time when they had such a really popular product, they were still negative on the margins, right? And this is what tells you that the brand name isn't really materializing into much when it comes to the actual numbers on the balance sheet. Their margins have been very small all along. And this is what tells you that the current troubles they're facing cannot be justified by the fact that they are developing a new game or the fact that they just acquired a new company. Because compared to this other one, this company hasn't been doing very well for themselves all along, right? The margins have been too small, but this other one, the margins have been very, very significant, despite the fact that these are the ones publishing free games, and these are the ones publishing some of the most expensive games you'll find around. So this paradox is what tells you to not just invest in a stock according to how big you think the brand is, but rather invest in a stock according to how solid their financials are. And clearly here you can see the NetEase, the ones who seem to know what they're doing in the business compared to these other guys. All right, I think that's it for this video. I don't have anything else to add for now. Yeah, but in case I get something later, I may discuss it in a separate video. That's it for this one. I hope you enjoyed it. If you liked it, don't forget to leave a like. And if you have a question, you can ask on the comments. Have a lovely day.